All right, folks. Now, we've talked in the past about two worlds colliding, right? The old world meeting the new world, the physical versus the digital. We talk about it all the time as far as the assets that we're stacking. You already know the deal. We go old world, we go physical with our precious metals. We go new world and digital with our digital assets. And that's true diversification as far as how we do it over here. Not here to give anybody financial advice, but you know that I'm willing to share the moves that I'm making as we navigate this transition in this moment. And so we're going to be talking about the U.S. Faster Payments Council just put out an update, a little blog post in which they do specifically shout out Ripple. And it's so interesting because they shout out Ripple, Visa, and MasterCard. And we're going to highlight that. We're going to talk about some other Ripple partners that are growing, some of the moves that they're making, which is a common theme that we're seeing with the Ripple partners. And so full update coming for you guys here today. If you appreciate what we're doing, please make sure that you like all of our videos. Help me out by sharing it out far and wide. Tell a friend, family member, or a loved one. Let's get them tapped in with the greatest transfer of wealth in world history. And everything is at my website, zachrector.com. Let's rock and roll. Starting out with our current events, folks. I'm praying for peace right now. From Mario Nafal with the updates. NATO readies 300,000 troops for European defense against Russia. NATO is preparing for a potential conflict with Russia by developing land corridors to quickly deploy 300,000 U.S. troops to the European front lines. Now, Biden actually did just touch down in France today, and so we're going to see what comes of that meeting. I think that he's meeting with Macron, I'm going to assume. We'll be watching that one. But we have troops would land at key ports, including Rotterdam, and move east via pre-planned routes to counter any potential Russian attack. Lieutenant General Alexander Solfrank says, quote, huge logistics bases as we know them from Afghanistan and Iraq are no longer possible because they will be attacked and destroyed very early on in a conflict situation. Wow. These corridors would utilize ports in the Netherlands, Italy, Greece, Turkey, and Norway, as well as the Germany-Poland railway. With escalating warnings of a Russian assault, this strategic move ensures rapid military reinforcement to defend any threatened NATO territory. This is from Telegraph, Defense News, and ERR News. Now, today the AP News actually did report and confirm that we have Ukraine striking in Russian territory with U.S.-provided ammunition, weapons, missiles, and what have you. And, I mean, to the extent where are we at in this thing, we've already been funneling hundreds of billions of dollars, right? We're well over $100 billion that we've sent them in money, in cash, and in weapons of all sorts, right? So we've already been supplying, but the next step that this escalation has gone to is now attacks within Russian territory. Now, in response, Putin has come out and said that basically Russia has the right to supply weapons to regions from where attacks will be carried out on sensitive targets in countries sending weapons to Kiev. Western instructors are present on the territory of Ukraine. They suffer losses which the West prefers to keep silent about. The U.S. administration insists on lowering the mobilization threshold in Ukraine to 18 years. The White House intends to get rid of Zelensky. This may take a year, but there are candidates for a replacement. Now, that's interesting. Are we done with Zelensky? We're going to throw him off to the side. Interesting statement here from Putin. Continuing on. The Constitution of Ukraine says nothing about the possibility of extending the presidential term under martial law, so Zelensky's actions can be qualified as a seizure of power. He says the United States must stop supplying Ukraine with weapons, and then the conflict will end in 2 to 3 months. Now, I'm going to stop it right there, folks. Here's the deal. We don't need to have this war. We understand that all wars are bankers' wars. And when we look at the solutions that are presenting themselves, XRP, gold, been around for thousands of years, still hasn't left, still here. And actually the amount of gold reserves held by central banks has now grown. The pace that they've been acquiring it hasn't been achieved in the last 50 years. But now the percentage that they're holding as reserves has grown to a pace that we haven't seen in a couple decades as well. So the pace at which they're acquiring, we haven't seen in 50 years, and the percentage being held as reserves we haven't seen in 20 something years. And then we bring it forward here to the new world, as we titled this session, right? The two worlds colliding. We have digital solutions, digital neutral bridge currencies like XRP and others that could potentially be solutions. But we've been highlighting how XRP literally could be a solution to help prevent these wars. Now, of course, is that how they want it to be? Is that how they're going to play it out? We're watching this in real time. This is not what we want. We don't want an escalation. We don't want continued conflict. The United States is already spread thin. And so I've been warning about that, how this is going to impact us with our reserve currency status. I'm not here to play politics. I'm just here to make sure that I can take care of my family. And I want you guys to be able to take care of your family. And the dollars that we are working for every single day are losing their status. They're losing their value, and they're no longer going to be traded by these countries, which are now set to actually start seizing our assets. See, we froze the Russian assets, but now we've started to seize them, take control, sell them off so that we can, funnel them back to Ukraine. Well, in return, right, this is a tit for tat, back and forth here. And so we need to make sure that we're positioned correctly. And I'm doing so by just stacking up the assets that I know are going to back the new system. I got my garden going, and I'm praying every single day that we don't get too crazy with this situation. But bringing it back home to our U.S. economy, nearly 3 in 5 Americans wrongly believe. Well, there's a vibe, there's a feeling that doesn't just come out of nowhere, right? There's a sense of urgency. We better figure out what's taking place here. That comes from somewhere. But they want to say, The Guardian, this is from The Guardian, wants to say that Americans wrongly believe the U.S. is in an economic recession, and the majority blame the Biden administration, according to a Harris poll conducted exclusively for The Guardian. Now, we can blame the Biden administration all day. We can wait for Trump to save us. We can do this or that, thinking that some politician or president's going to save us. I've been reiterating the point that, yes, we are in a silent recession. We are in a depression, meaning that growth has been depressed. Yes, maybe we're not in a technical recession, but our growth has been depressed, and that is what meets the definition of a depression, is depressed growth. We're not achieving our full potential. And when we look at the data points that we want to actually show you, what the mainstream media doesn't want to show you, it reiterates the point and brings it home for us. When we look at job openings from JOLTS, dropped by almost 300,000. This is why we track the Indeed data, a leading live indicator, closely from Macro Edge. Job openings are approaching February 2020 levels, with 20 to 30 million more people in the United States, a recipe for disaster. Kabesi letter, this is concerning. 65% of middle-class Americans are struggling financially, according to a recent study. Regardless of income level, almost 60% of polled people claim they are going through financial hardship. Even more concerning is that they do not anticipate their financial condition will change for the rest of their lives. Meanwhile, 33% of people surveyed faced extreme stress about their debt. 33% of respondents are concerned about saving for the future, and 32% are concerned about paying for unexpected expenses. American consumers are struggling. And so The Guardian and other mainstream media sources want to say that Americans are wrongly feeling like we're in a recession and thinking that we're in a recession. No, when we go to, find a place to live in, when we go to put a roof over our head, this is the worst affordability that we've ever had in the history of the U.S. real estate market. Rents are continuing to go up. We're finally starting to see some easing in the real estate conditions. When we go to the grocery store, when we go to fill up at the pump, when we go to try to get a job, there's a sense that things aren't right. And when we see these different studies that reiterate it, we see the jobs numbers reiterate it. We see the job openings continuing to reiterate the point that we've been bringing home, which is that you better figure out a program that's going to take you and your family and your business and your investments through this recession, depression, and reset of all of the asset classes. Now, as I titled this session, Where Worlds Collide, this was the title of the blog post put out here by the U.S. Faster Payments Council, which Ripple has been a member of this council for a while. And they titled it, Where Worlds Collide, Currency Conversion for Cross-Border and Digital Assets. This is the Faster Payments Council Digital Assets Working Group. Okay. And they're talking about this update, but we scroll on down here. Where did they mention Ripple? Well, I passed it. Okay. It's this one right here. Currency conversion for digital assets itself is likely to be modeled after FX. And they say where the conversion takes place for digital assets remains to be seen, although it is likely to be housed on DLT, distributed ledger technology. Companies like Ripple, Visa, and MasterCard are likely to vie for dominance in this space. Now, what's interesting here is the U.S. Faster Payments Council Working Group. You know, they're not really mentioning anybody else. They're not mentioning any other cryptocurrency projects. They're not mentioning any other crypto tokens. They don't mention XRP, but they say companies like Ripple, Visa, and MasterCard are going to be vying for dominance in this space. And that's what's so interesting is that we continue to see Ripple not only mentioned, but we see them making waves, pun intended, in this space with real partnerships, real adoption, real use of the digital asset XRP, which they are leveraging. And it's not just acknowledgement from, random crypto news websites. It's not just acknowledgement from crazy YouTubers like myself. This is the U.S. Faster Payments Council in this regard. Now, continuing on, we see Swiss banking giant IBIS Management integrates Ripple and Swift on one platform. Quote, IBIS goes on to explain that this gives its customers unlimited access to a huge banking network. Look at this graphic right here, folks. Ripple and Swift united on one platform, introducing a new financial messaging platform with the convenience of having Swift and Ripple in your pocket. Well, yeah, send your old, outdated message through Swift, which they have updated to the GPI. Their messaging is getting a little bit better, right? But when it actually comes to settling, when it actually comes to freeing up the liquidity, right, that dormant liquidity in the Nostro and the Vostro accounts that is over 20 to 30 trillion, depending on the estimates that you're pulling from, that's what gets accomplished with Ripple's products and with XRP on-demand liquidity. Now, what's interesting to see here is this merger here on this platform of Swift and Ripple. As we saw Brad Garlinghouse on Liz Clayman, Fox Business, just the other day, a couple days ago, she brings that comparison once again, right? Oh, you guys are going to take out Swift. And as Brad has been saying now for a long time, we're working alongside all of the traditional space. We're working alongside these institutions. Eventually, the better solution, the better technology, and the better service and product will be chosen by the customers, by the clients. And so it is inevitable. I think that it's a matter of basically adapt in order to survive or get left behind for, ancient entities like Swift. Now, and we're starting to see this with Ripple partners like Neum, and I'm going to show you Lehman Way. These are financial institutions that are leaning into this technology. In a most recent interview, David Schwartz actually said that they got all these bank partners, which are great for the headlines. Oh, Ripple's partnered up with a new bank. But when they go to actually start settling billions of dollars with XRP, the banks say, oh, wait, hold up. We're not ready to do that yet. We need to keep that friction. We need to keep collecting those fees. We're not ready to go to on-demand liquidity and, pass on those benefits to our clients just quite yet. Our clients haven't demanded it just quite yet, so we're not going to roll over. That's basically what's happening. And as he said, they basically can't use XRP on-demand liquidity in the United States yet. And that final ruling from Judge Torres is going to be coming, and we'll see more on that. But this was an update here from Neum. Neum expands cross-border payments platform to serve global marketplaces, put out just one day ago. The global fintech has announced new product features and a partnership with Lehman Way to help marketplaces accelerate growth beyond borders. Now, this is a pretty interesting deal right here. Pay international sellers in over 220 plus markets, that's quite a few corridors, in 100 different currencies and 100 real-time corridors to bank accounts, cards, and wallets. Very interesting. Lehman Way and Neum joined forces to help marketplaces accelerate growth beyond borders. Lehman Way, one of Europe's leading payment service providers with over 400 marketplace customers, has partnered with Neum to add payouts via SEPA Instant Rails to its existing solution, enabling online marketplaces to meet the needs of more cross-border sellers and accelerate growth. So far, Lehman Way has processed almost 1 billion in payment volumes on behalf of its customers via the Neum platform. And that's the point that I want to drive home. Why hasn't XRP gone up? All these partnerships. I know there's going to be comments down below. Leave a comment down below for me. I'll answer your question right here. All these partnerships, why isn't XRP moving? Because these partners they've only moved $1 billion so far in this platform with Neum. And this is not a platform it has the option for XRP, I believe, but this is not exclusively XRP. But just this platform, right here, has only moved $1 billion in payment volumes. And not all of that's on XRP. Probably very little of it is XRP. But what's important to note is that Lehman Way and XBot, they were the ones that opened up the corridor in Europe. And this was a few years ago. I'm going to show you this article right here, Electronic Payments International. I had to pull up this one just as a reminder for everybody. Lehman Way and XBot in Europe, they are the ones that opened up this corridor in Europe for ODL back in 2022. Right here. Based in France, Lehman Way offers payment solutions for online marketplaces, while XBot is a Swedish money transfer provider. XBot enables transfer of money between Sweden and Thailand. As part of the partnership between Ripple and Lehman Way, the latter will use RippleNet's ODL to improve its treasury payment system. RippleNet's ODL is designed to use XRP to facilitate crypto-enabled payments. Lehman Way will be able to enhance operational capabilities without the need to pre-fund accounts abroad through the partnership. And so we've really been seeing the growth of these types of institutions that are willing to work with Ripple, that are willing to take advantage of this, and they need that dormant capital freed up, right? They're not the JP Morgans of the world. They're not the Citibanks of the world that need to roll over to this technology. JP Morgan and Citibank have an incentive to keep us back in the old system where two worlds collide. They're the ones that are holding back that old system. They're the ones that are resisting that new digital real-time system. And you guys saw that we just got our stock market just went to T1. So if you conduct your trade on Monday, you get your cash on Tuesday. So we still aren't even at real-time settlement, not 3 to 5 seconds like XRP. We just got to T1, and Gary Gensler, in his interview on CNBC today, he touted that as a success, a huge success, that we went to T1. How about we go to T 3 to 5 second, T real-time gross settlement? How about that, right? And this is the trajectory. But just to reiterate, we have Ripple partners growing. We have Ripple being mentioned by the U.S. Faster Payments Council. But folks are sad because XRP price didn't go up today and meme coin did. Okay. Well, I'm here to tell you folks that the fundamentals are only continuing to get better and better. It will eventually be reflected in the market price. Market price right now does not reflect fundamental value. Eventually, that opportunity to arbitrage between the two will close, and that will equate to a higher XRP price. I hope you guys are prepared for that. And I have another update that's going to be dropping here later. And I'm going to show you guys 80% of Japanese banking industry have partnered with Ripple. I went and I deep dived this one. I'm going to be putting it in a separate video because there's a lot to break down. So make sure you guys subscribe, hit that notification bell, and everything can be found on my website, zachrector.com. We'll see ya. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.